Over the past 10 days, I've been asking viewers to pause the video, write down, and put on your chart what you see on mine. Use these 3 structural analysis tools that I'm giving you, and let's review over the last 10 days what's happened per my videos. So in the future, when you see that, like, this is going to be evidence that you might want to take me up on it, because in this one time, it worked actually perfectly. So back here, right around April 28th, right here in price, I made a video putting this box on it during a live show. So I made this during the live show, and on a recording of the live show that I uploaded a little bit later. It is from the live show though, but during the live show, here is this. My first 2 structural analyses that I just ran, okay? Which are 2 of the 3 things that I was talking about earlier, to asking people to put on their charts. So for people watching the recording, I just did my my tilted range and my non-tilted range, and they're both pointing that price will hit this box around this time. All right, and around this time means the time axis, the left and right sides, I put them there purposefully for price to hit it exactly in that time frame, right? And so let's go ahead and take a look at current price. Bam, hit that time frame. All right. Not all my calls are that, spot on. However, I left myself room here with multiple days and hit it roughly in the middle. Also, price, I made a video with this thumbnail here that was very bearish using the monthly chart, so specifically long-term time frames. And after a mini pump on the hourly scale, when Twitter went super bullish, right after the FOMC meeting, price went up a lot and people started getting bullish. I doubled down on that bearishness with a follow-up video with this, even clickbaited people who want to be bullish. But during that clickbait bullish video, after price had done this, so it's right here, I was recording about right there during that video, I doubled down. In 5 times in the video, I reiterated something to this effect. That's bad thumbnail, all right? It's completely valid and still statistically and mathematically probable. Reiterating to people, it doesn't matter if this pump happened. What I voiced in the previous thumbnail, which was very bearish, is still mathematically probable until price gets above a specific line. I think it was the monthly 10 I was talking about. And price ended up getting rejected almost perfectly by one of the 3 tools that I've been asking people to write on their chart. You got essentially a perfect rejection. These are the hourly candles, and price never closed a candle above my trading channel. And if I zoom out, the top of this trading channel has worked pretty beautifully throughout the time that Bitcoin has been in it. This wick up, so on and so forth. So just for the future, when I ask you, hey, steal this tool from me, like put it around Twitter, I don't care. Just get people to use it. The tools did work in this case almost, perfectly. So make sure when I say pause the video, and if you're having trouble doing it, you can either ask me in the Discord community. The links to that are in the description section, and or you can ask me on Twitter. My handle is Cosasverdes with the number 2 at it. Or if you can join up for the YouTube tiers and get essentially exclusive rights to be having the live show Q&A questions answered first, and you can ask me on a live show as well if you're a tier member. All right. So what we're going to do here is I want you to essentially watch this video with the knowing my intent that I want you to try to ignore all of the hype and all that's the bottom type of stuff that you see out there, because this might just be the beginning of heating up to the downside, folks. It really, really might. And I've been saying this for quite a while. So let's take a look in, some lower targets here, and hopefully you're holding tether by this point. I've been screaming and yelling that for probably since December, and let's go get this video. Let's make a note that one of the 3 tools, price has gone out and below it, and therefore is no longer valid. The micro trading channel, which you see flashing here, which I've asked folks to stop and pause and write it down and put it in your chart. This is still valid because price is still within it. However, the quarterly trading channel, which is another tool that I've paused for, price has now broken out of it. So as of this point, so in terms of structural analysis, I tend to like to be able to compare 3. Kind of like it's nice to use 3 different indicators, stochastics, RSI, and candlesticks are my 3 indicators essentially. Or no, EMAs, stochastics, RSI are my primary ones, and then candlesticks, I guess, would be a 4th. But I try to mix that with also 3 different structural analyses, so I have to add one. So what am I looking at this point? However, right now, we might use something to the effect of the The macro range, the one that I've been posting all over Twitter for quite some time, for months and months, since last year. It's easier to see on the 8-hour chart. You can get the full year of price history. So this is one tool that I'll be using. And again, you can feel free to pause the video and make this, make this for yourself on your chart. Just make sure all lines are parallel. And again, I'm on the 8-hour chart to see about 14 months of price history going back to January of 2021. Okay, right. This is around the time Elon tweeted, right over there. So this is the macro non-tilted trading channel, one tool that I'll be using for now until it's broken down and out of. The macro tilted range, and again, I promise, like, even if you post on Twitter, I don't care. Like, feel absolutely free to steal these straight lines. Like, get other people to understand that things are in a range right now. Like, absolutely, or just use it for yourself. This is the second tool that we'll be using. So 2 macro, and it goes back to the same time frame. Back to this is January 2021, using the 8-hour chart, because on an 8-hour chart you can see a full year price history. And then the third tool I'll be using, I will supplement the macro channels with a very micro channel. And then what you can also do is I put it on a lower time frame, like the 2-hour, and you can see how that one tool interacts with a second tool, such as to see if they have any congruence anywhere. For example, the macro tilted range. It is saying that, because so this orange area is the quarter zone, this yellow area is the half zone, and this is like your 3/8 line and your 1/8 line, the quarter zone, half zone, 5/8 line, so on and so forth. And a macro range that goes back 14, 16 months, something like that. Because the quarter zone has failed, and prices now, so let's actually take off the micro range. What this is saying here is price has not only broken below the quarter zone, but has gone below the 1/8 line and has specifically used it as resistance. Let's go down to the 5-minute. It's specifically used it as resistance, which gives a statistical edge that before any significant move up, this bottom channel will be hit. It will be hit. And then when you make that safe assumption, because that is a safe, I'm telling you, it's statistically likely to happen. Is it proven to happen? No, it hasn't happened yet. Right? However, you have a much greater than 50% chance that will happen before any significant bounce to the upside. All right? And I'll give you these levels, but let's see how this matches with other stuff. It all starts coming together, I promise you. Watch. And if I seem a little excited about this stuff, it's because I am. I like staring at charts. All right? And it gets beautiful once you understand them. So the way that price behaves around this line is it does like to wick past for several hours. So these are 4 hours. So this is a 4-hour wick. So it was only down here for an hour or two. Here it stayed below for about, 12 to 16 hours. So there are multiple actual 4-hour candles here. Here is a candle wick only. So it stayed under there only for an hour, but it only stays down there. So when it does interact with the blue line, it tends to go below it, right? And so I have a box down here of where I think that this will end up hitting in the exact time frame that I think it will hit. I bet it will test down first before it comes back anywhere reasonably within this quarter trading channel closer to 39K. So for example, I think it's very statistically probable that before 39K is hit, that 34.7 or the top of this box will be at least hit before 39 is ever hit again. Does that make sense? So does that align? So let me take off all these darn arrows. Does that align with anything on the short term, the very short term trading channel that I have? And if you line that up, I'll take off the macro range. So this is only the mini range. The mini range, all that would be is it comes to test the bottom perfectly and then tries to bounce up, maybe up to even to the top of the range, which is still a lower high to that one. It could easily happen. So let's take this off. And how does that work with the macro tilted range? Go back to try a 4-hour chart might be fine. Does that wick below the blue line just like all the other times? Yeah, it does. And we already know it's statistically probable that this blue line will be hit in some way or interacted with price. So we have two things aligning. All right, now let's take this off and let's put on the macro range. What does that align with? Hitting the bottom of the quarter zone. It all aligns. So it really does look like 33,600. I mean, I think honestly has a really good chance of being hit. But because the max, yeah, it really does look like 33.6 is probably a darn good target before it's going to pop up. That would be my single guess, about just a couple $100 over this orange line, 33.6, maybe 33.9, something like that. 33.6 to 33.9 would be my guess if I had to make one singular guess. Like if I'm trying to catch knives, which I don't suggest you try, like trying to long bottoms and short tops is the fastest way to lose your money outside of using more than 5x leverage. You can actually have really good trades and trade setups and use a 50x leverage and get destroyed instantly. So outside of that is the easiest way to lose your money. The second and 30s, tied for second, easiest way to lose your money playing with futures is trying to short tops and long bottoms. Trust me, my 2018 self was an expert at doing that and losing all my money multiple times. All right, it's the worst way. So I'm not suggesting, hey, Kosa said 33.6, I'm going 50x long. Absolutely not. You're doing the first worst thing and the second worst thing together, right? You're trying to catch a bottom and you're doing it with too much leverage. So I don't want anybody to take this analysis and my, confidence level with it, throw in, hey, it's more than likely to happen. I don't want anybody to get messed up by doing that. All right. Because TA and trading are totally different. Totally different. You really need to join a community if you're going to try to learn how to actually click around with your money more than a couple times a week. You probably need to be in a community to help you along with that journey. And on the trading side of things. All right. So now we have all three of our tools are aligning to the same blue box. And that's how I got this blue box, because everything seems to align. The three mega tools, so two are macro and one is micro, they all align perfectly. And my singular guess is 33.6 to 33.9 will be hit before any, now or lower, let me be specific, this number or lower. I'm not even calling necessarily for a bounce. I'm just saying this level likely will be hit before there's any test higher, closer to 39. Am I making sense? This level or lower. And here is why I'm saying or lower. I typically don't pull out the CME charts for analysis on YouTube, but I try to keep that within the community, that and NASDAQ and all of the different traditional market indices. But let me show you why I'm trying to warn or lower, okay? I'm going to be very specific, that or lower, and here's why. Let me get rid of some of these. Okay, I'll actually leave this here so you can see that maybe. Here's why. Let me go to the CME chart. CME just means this is where futures are trading. I believe it just like the futures for the traditional index or the traditional market indices. I believe this does not trade over the weekend. This is I think this is a 24-hour, 5-day-a-week market. I think it's 24/5. All right, so it trades Monday through Friday, 24 hours a day. So it closes over the weekend. Therefore, gaps can only happen, between Friday to Sunday, Sunday night. Which means spot price separates from this because this is not moving between Friday and Sunday night. Does that make sense? Between Friday evening and Sunday night specifically. On Sunday night at 8 p.m. New York time, or 1 or 2 p.m. Berlin time or slash UK time, that time on Sunday night it starts. This starts moving again, and any separation between spot price, which is 24/7, and this one, that creates gaps, especially if it separates it one way or another, right? But they're typically all filled. So if you zoom out, you do have a lot of gaps to fill. Not all gaps need to be filled. So these are kind of like all the gaps that were left open to the upside. These are all the open gaps, right? So if you can go ahead and pause this if you want. Again, the ticker for this you can see behind right here. If you want to add this, it's BTC 1 exclamation specifically. So you can see it right here. That's the CME chart. And I'm not saying, no, this doesn't guarantee this is going to fill down at 9,700, right? It doesn't mean Bitcoin is going this low. They don't have to be filled. However, if you look at just this top one, this is why I'm saying or lower, this one's coming in around 32,400, just roughly 32.4, okay? That's where this gap is. And look structurally. Trying to look at bare naked price. And just eyeballing horizontals, nothing more. Look at this. This was your cliff of support. Price has not just fallen over the cliff, but has closed now 2 daily candles below the cliff. You could call this a trend line and this a trend line, and guess what? It happened almost at the same time. It fell off this support and this support. Where is it likely headed? Knowing that price it's like a black hole. This has a lot of gravity. price is going to be attracted to it. So if price is likely already going to hit 33,600 or 33, around 34K, just a little under or lower, it's already likely to happen. If price is going to get down that way, as if you could personify price, make it a person. It might just be scooting along saying, hey, I'm at 33,800, and looks down and be like, I usually pick up all those gaps. I'm so close. I'm just going to go down and go ahead and get it anyway. So, but price kind of does that. It acts like a black hole. The gaps do, and it sucks price into it. Similar to how I say on my channel, when two important lines cross, doesn't matter if it's EMA with a horizontal or two EMAs or whatever, when two important lines cross, price likes to touch it for some reason, regardless of coming down to the cross or coming up or coming, up to the down to the cross or up to the cross. Price gets sucked into it, and gaps kind of act the same way, especially as price gets closer and closer to it. So now, that's kind of my working theory, that since price is already likely to come down here, it's going to stop it and look down and scratch its head and say, I might as well just go pick. It's like picking up $1 off the floor. Let's pick this guy up. Let's just go do it. I see $1 that's not windy. It's right here. It's worth, I probably won't pick a penny up off the floor. So that's US currency, right? For other people, a penny is like something that no one uses anymore. I think people from Mexico would understand. They haven't used half of their coins for like 10 years. But we have the penny, and you wouldn't pick that up off the floor, but this is like picking up like a $10 off the floor. So price will likely gravitate towards it, and that's coming around, again, about around $32,400. And from a personal standpoint, if you add, not personal standpoint, sorry, a different indicator standpoint, if we go to spot price and take a look at, even though the last time I said this, to the downside, and I said it was a statistically probable scenario, it actually did not play out because we got a fake out instead, and then what I anticipated happened. But using this 4-hour RSI, you are functioning. It's functioning off of lower lows and lower highs as of now. And typically, you don't get your lowest. I'm going to make my face big on the 4-hour chart specifically, and like even the 8-hour as well. 4-hour and 8-hour chart, you typically don't get your lowest low in price until it's the first like mega higher low for the 4-hour or 8-hour RSI. The higher low actually makes a lower low in price when you get that deep into the red. Let me show you what I mean by the red. So if price only, came crashing down to here, like not very deep into the red, and then scooted up and made a higher low, that would not be a lower low in price because it's not in the red zone. But when you go into the red zone, you see this is the lowest low here. Let's actually mark that off. Alt, how do you do that? Alt H? Nope. Alt V? Yes, perfect. And then, so you see how this is the lowest low in RSI on the 4-hour? And what I mean by mega is because it has multiple bounces, higher low, higher low, higher low, higher low, but it's the higher low after it dumps below that white squiggly line, which is the EMA. So that's, I should come up with a better phrase, but so this is a higher low, that's a higher low, that's a higher low, but I count the mega higher low as after price, the RSI spills below the white line. And so that one right there should be your lowest low in price. I actually don't know if that's true. I hope this is not going to make me a liar, but it should be. I'm pretty comfortable with this stuff because I stare at charts a lot. Barely. That barely worked. So you can see exactly as I mark them. Remember, the second one was your higher low in RSI. Your first mega higher low. It had multiple higher lows throughout all this on the RSI. And that was a lower low in price. It happens it just happens all the time. It's very, very statistically likely. Given that we are operating right now, the charts are operating off of lower lows. Let me get back to where I was. 4-hour RSI. And let me scoop out what the EMA needs to do. The EMA needs to come like this and go all the way up like that. And then the RSI, typically it doesn't just go like this. You don't get a bounce like that. I'm telling you, like it just doesn't happen very often. And if it does happen, and the stock market the traditional market isn't supporting that, you could smell a fake out, right? Is that how you smell a fake out? Go, that's probably not how a fake out smells, but you can smell it if you ever do see something like that happen. So that is not statistically probable at all. It's very improbable to happen, even with the stock market going up and pulling Bitcoin up. So what you need to see is price get above this, boom, 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 multiple higher lows, maybe something like this, and then it crashes below and then tries to get back above it, something like that. That will be your lowest low in price. Does it have to spend this many days between? So that's from May 7th to May 12th. Does it have to spend 5 days? I mean, yeah, it's usually 3 days to a week. So let's see how long it took between these two. So this one right here was 11th. This one was, that took a week. That took almost 7 days. Almost 7 days from one higher low to a, what I call, it's a horrible name. I need to come up with a better name, but a mega higher low. And we haven't even gotten this higher low yet. We haven't even seen this type. We're still here, folks. We haven't even come up, the RSI for the 4 hour hasn't even come up to even test the EMA yet. So let's go to current. Let me delete this stuff. It hasn't, 4 hour RSI hasn't even come to test that yet. We're very early in this. And so even this this type of analysis showing you that it's statistically likely to make a lower low. And then when you add on what the charts, the structural analyses are telling you, it's likely to make a lower low also. And then everything just magically aligns. And then there's a gap down there. What I'm thinking is, I think the gap might be filled kind of soon. And then maybe get some type of bull trap to the upside, and then maybe capitulation there a little bit later. We'll see how the traditional markets go. And I've already told you what tickers to watch on the traditional market, even though I try not to offer that analysis over YouTube. But the two I like to use the most are just the NASDAQ indices. This is the futures of NASDAQ, which trades 23 hours, 5 days a week, right here, that ticker. And then just the spot trade index for NASDAQ is IXIC, which you can see right here. Hopefully that was helpful. And again, feel free, when I say pause the video and write this stuff down or put this on your chart, feel free to take it and make it your own and use the tools that I give you as freebies. Go ahead and click this video right here if you want to see the That's Bad, the original one when I was smelling more downside, and click this video right here if you missed the one where I doubled down on my bearishness, even using a clickbait bullish thumbnail to get people in so I could tell them 5 times. This is still likely to go down. If you missed either of those, hey, you just got Timified Worldwide. We'll see you next time. Peace.